Anuj Khanna joins us, founder and managing director and CEO with Affle. Let's take our conversation forward with Anuj. Anuj, good morning. Thank you for joining us. How have you been? Haven't connected with you in a while.
Good morning. How are you?
All well. Can I say the same about your numbers? Because all is not
Well,
looking well there. Because I'll tell you why. Because I'm used to tracking Affle, which is a high growth company, grows at 30-35% plus. Suddenly revenue growth for Q4 has gone down to 12%.
let me explain that. If you look at the overall annual performance of this year as well, the CPCU business has grown year-on-year basis over 35%. And when we look at this particular quarter itself, we would see that in India and emerging markets, which contributes about 82% of our business, we actually grew 20% in that business as well, year on year. And in fact, with margin expansion, if you see the overall margin growth, EBITDA growth for this quarter versus the same quarter of the last year, we grew EBITDA by about 22% plus. So overall, I think we remain a very strong growth story from a overall perspective. Having said that, in the last 2 quarters, what has happened is that in the developed markets, particularly US and Europe, we saw some headwinds with respect to the macroeconomic conditions. And we have also calibrated a very clear turnaround plan so that this year, FY 2024, we can deliver around 20 to 25% organic growth going forward as well. So we continue to remain a very strong growth, long-term growth story as far as our performance, even in the last quarter or the previous financial years are concerned. You've got to look at it as an overall trend. And when you slice and dice the numbers, you find that India and emerging markets continue to be strong, resilient growth in the 20-25% range, which is consistent with our guidance. Our margin expansion story is very clearly coming out. And all that remains to be solved is the developed markets where the macroeconomic conditions are well known to all of you. And how we are turning that around this year is what we will demonstrate as we go along.
But what is the situation and sentiment on ground, Anuj? Because, everywhere around us, we hear about digital, ad spend, mobile marketing, all of it going up. From a CAGR of 55% in the last 5 years in terms of revenue. Do you really think there is growth potential in the medium term?
Well, you see, we have been guiding very consistently that organic growth should be very sensibly in the range of 20 to 25%. And we have already delivered that in India and emerging markets consistently, even through the last 2 quarters where there were clearly quite a lot of headwinds. So even with those headwinds, India and emerging markets, which is 82% of our business, grew very nicely in the 20-25% range, right? And with margin expansion. So there is clearly growth in the market. There is growth to be tapped into the market. And like I said, the only thing that we need to really solve is how do we double down and develop markets better, execute better over there. And we have a very strong turnaround plan, which I will be covering today on our earnings call with all the investors.
Wanted to also understand a little bit more when it comes to your margins because they've been on the weaker side. What is the outlook as to where your margins could sustain? Do you see them trending towards 25%?
I think, if you see even compared to last year to this year, we have seen a margin expansion. Even for this last quarter, I think we have seen a margin expansion in terms of EBITDA. And we have consistently now been giving over 20% EBITDA for the company. And going into this FY 2024, we believe that it is very sensible to see, 20 to 22% kind of EBITDA in that range, while delivering organic growth of 20 to 25% on revenues overall. So, of course, we'll see margin expansion, which means that on EBITDA terms, we should be growing organically much more than the 20 to 25%. So even if you look at this FY23 results, you'd find that we grew, our EBITDA growth was higher than our revenue growth, right? So there is clearly margin expansion. So I wouldn't see weakness in that. I would say that there's a clear trend that we will continue to improve margin by a few basis points each year. And if we take a 3-year view to it, we should be heading closer to the 25% EBITDA over the next 3 years. Yeah.
So let's understand the communication for your shareholders and for our viewers. 2020, Affle was like a high growth company growing at 50% plus. It is still a high growth company, but can I say instead of 50, because of base and because of globally what is happening, it will move from 50 to 25%.
So let me give you a slightly more nuanced explanation of this. When you look at 50% growth, you're combining organic growth as well as inorganic growth, which means that we were doing certain acquisitions that was making the growth 50%. Now, what I'm talking about today is that 20 to 25% organic growth is still a sensible growth forecast model with respect to our industry and specifically with respect to our differentiated business model on CPCU. So it's a very defensible, realistic growth plan for the company to be looking at 20 to 25% organic growth. Now, since we are also deeply profitable and generating cash on a regular basis, even for FY 2023, if you look at our cash flow to PAT ratio is 106%, which means we are basically collecting all the profit and more that we are generating through the year. So what are we doing with that cash? We will be looking at sensible inorganic growth plans as well, and that will yield incremental growth. So if this year, let's say we do another acquisition sometime during this year, that contributing towards the overall growth plan should sensibly take us to the 35 to 40% growth range, even compared to FY 2023. So you've got to look at the numbers holistically. We are an aggressive growth player out there, both organically as well as very sensible and calibrated inorganic growth plans. So when you look at the numbers of 50% growth in FY 2021, you're looking at both organic and inorganic. Within that, the organic growth was around 30% and now we are being a little conservative and saying 20 to 25% growth on organic year-on-year basis is reasonable given what's happening in the market. And given our trend lines and what the pipelines are today, I can clearly see that we are on track to deliver that.
Okay. All right, Anuj, appreciate your time. So glad you could join us and so nice to have you back on ET now.
Thank you.